morning. All right, so let's get started. So we have a little gap up this morning, obviously, because I sold my position and my exposure yesterday. So it was almost certain that it would happen. All right. It's not the first time, and I'm probably not the only one with that curse. But, so yeah, gapping up 0.4%-ish on job reports, good job reports. So good news is good news again. But yeah, so I explained my decision yesterday. Basically, I'm in a drawdown as of now since the start of the year. And I just trade differently, right? I can take big overnight risk. I don't want to further dig that drawdown. All right, and Monday I took exposure. I had cushion. I increased that exposure, trying to be a bit not too aggressive because this is how I trade. But I took the exposure that I had to take. I had good cushion, more than 1% cushion. And yesterday, the market being the market, we rejected at the declining 21 DMA structure. And that cushion was no more. All right. So the cushion that financed that exposure not being there, I was at risk overnight of a gap, especially with that rejection. Yes, you can also pretend that everything will be all right and the market will just continue higher, but you just don't know. All right, when you rally into a declining 21-day structure, and the market is what it is recently, you just can't take that risk. All right, it's called risk management, and that's what will keep you in the game long enough to kill it over time when the market is good. If you give back all your gains in bad periods, being chopped and taking big risk overnight without the cushion, then that's how you eventually blow up. All right. So yeah, decided to cut that exposure yesterday. So if today we reconfirm strength, we reconfirm the 21 EMA reclaim, there is setups, then I will re-engage and take that exposure and hopefully have some cushion now to hold overnight, like I did Monday night. So that's a game for me, trying to gain that cushion by the end of the day, trying to have that cushion in order to reduce that overnight risk and just manage my drawdown the best that I can. And when the market will be good anyway, I will be able to just get that cushion going and allow me to be a bit more aggressive overnight and carry exposure. All right, so picture will change probably at the open. We might have that 21 EMA reclaim on QQQ. If bread is good as well with that gap up, then we might reconfirm the hookup on the McClellan summation from an oversold levels. So for me, that will be another signal to engage today, this morning. So if we do confirm that, I will try to re-increase exposure. Nothing crazy. I don't want to burn myself chasing a gap up. So ideally waiting for some weakness and see how we react to that reclaim. So yeah, price we want to see that reclaim. The McClellan summation, we want to see that hook up from OS readings. And that McClellan oscillator obviously still neutral, no overbought yet. Yeah, Alex is in a drawdown and sell is exposure. It means buy everything. But that's the game of trading a drawdown, guys. Unless you want to take big risk. But just imagine that this morning the job reports came completely differently. I carry 60-70% exposure with minimal cushion, and then everything gaps down this morning. So easy to say in insight, oh, you should have kept, the market is gapping up. Yeah, but yesterday nobody knew. All right. So that's risk management. That's why it sucks, because often you just close that exposure and the next day it gaps up, but it's part of the game. All right. The day that, imagine that today we gap up, we gap down 1-2%. Then my drawdown is more deep, and it will just be harder and harder and harder to get off of that drawdown when the market is good. All right, I want to keep that drawdown the smallest possible, and when the market really kicks off, I'm not meaning a 0.6% gap up, right? When the whole market goes into a power trend, I don't want to take half of that power trend just to break even and push into a new all-time high. I want to keep my drawdown so small. I mean, a drawdown is a drawdown, and they are part of the game, all right? You cannot not take a drawdown, but you want to keep that as small as possible for when the market really kicks off. You're into a new all-time high within a few days to a week, and then you just push into a new high your portfolio. That's ideal scenario. And yeah, while you are in a drawdown, it means that being more cautious, and yeah, sometimes it means selling exposure, even if the setup is still there. All right, so enough for that. So there's no portfolio review this morning. There's not much in the pullback scan. So LRCX is setting up core a bit too all over the place for me. MTSI. So I will probably have to wait the open session to see really what's setting up. And yeah, really see what's setting up, and what's in the scan. Something that I built, so you can find a mega cap watch list in TradersLab in my shared ones. So that's something that I like to review. I talked about it, that I had that list in TradingView, but now that I'm trying to use exclusively TradersLab, I wanted to make that list as well. That's something that I want to review each morning, and I do each night. So I like to sort by RS rank. So I talked about it. If we have some weakness or some more sideways action, I would really like to go for Apple. Google might be in play today on a daily reversal and 21 EMA reclaim. That might be one of the focus that I have. Now earnings are behind, and the three last day were kind of inside range, and you could see that action as a higher low being made. And if today we reclaim yesterday's high for a daily reversal and we reclaim the 21 DMA structure, then that could have been a nice shakeout. NVIDIA still looking very good for a reclaim and backtest. However, the earnings are not far. AVGO could be in play as well. So let me put those in focus list. Oh, this one is already in. Leli looking like a stage 3, stage 4 breakdown. No interest. Tesla right into declining structure. I want to see that reclaim and backtest. Meta is still in focus list for me. Amazon and Microsoft still below, well below declining moving averages. So there is constructive action in the mega caps, and I would like to get that exposure, especially if Nasdaq confirm the structure reclaim, and if we see the McClellan summation hook up, then that's an area of the market that I think has potential. TTMI still setting up. LRCX. All right, so that's the stuff that I see in the mega caps. And we can look at the liquid leaders just to see what might be in focus as well. So that's all the stuff extended. You have Micron, potentially a daily reversal today. I know they have some kind of conference. That might be a name that is looking good for an entry. And if STX, WDC, and SNDK find support in their rising 21 DMA structure, then it would add more weight to that traded idea as well. TTMI, we have that already. Core, like I said, all over the place. LRCX already in focus list. AMAT, Parama probably have earnings, but I will track that. This one I missed yesterday. MCHP looking very good. Maybe if we have some weakness, that would be actionable. What I don't like though is kind of the longer term chart on this MCHP. So if you look at longer term chart, that's a bit all over the place. So there's no clear trend. That's what I call a mean reversion machine, right? So I will probably remove that from the focus list. Comp setting up for a back test. Google, we discussed that. ENTC, I think it was way too weak yesterday. And yeah, NVIDIA has earnings too soon. So that's pretty much what I see. Let me remove, I will remove MCHP. All right, so we'll see what is actionable. So Micron might not even be actionable, gapping up 6% now. So yeah, that's the stuff that I have. We'll see if it's set up. Any plans for alerts in TLab? No, not yet. Right on, guys. Risk management first. That's our job. Then the upside will take care of itself. So yeah, so that's the game plan for me today, guys. We have a nice gap up. Might kick off another anticipation signal for me. So obviously I want to engage. But yeah, now that we have a gap up, that will probably be a bit less aggressive. I will want to see some weakness or at least good spots. I don't want to chase a gap up right into. So if you look at QQQ, we're gapping up right into a declining structure as well. So yeah, that's a nice gap up, but we're right into the declining 21 EMA. So you don't want to go heavy there, okay? I want to see how that gap is handled and probably wait at least to see the initial reaction. If sellers and how hard are stepping up. So yeah, that could trigger another potential anticipation signal for me. But with that gap up, it will be tricky to get exposure. All right, so ASTS, yeah, that could be into play. That's a big gap though, but we're just above yesterday's high, so we could see yesterday as kind of a expectation breaker slash kicker with that higher low structure being made. So if you retest kind of yesterday's high, that would be in play. Yeah, for sure. That's a bit too high of ATR from me at 12% ish. So that's why it's not in my scan. But yeah, the setup would be good for sure. Question about open EAT. I know you've said in the past you like to trim exposure and lock profits once open EAT gets past. Would you change that to a lower threshold and a more? No, no, I don't plan to change that. You never know, right? Sometimes the best trends start from choppy periods. So if just at the end of that chop period, you start to reduce everything and cap everything, and then you miss all the trend that follows, that's not how an edge works. You cannot use I mean, your hedge will play in down and up, but if you cap the up, then it will screw the down period. So no, I don't plan to change anything. And guys, we've been in this base chop-ish since October. And even before September was pretty short. So if we reclaim and we're starting that trend and the tech catch up to the broader market. So let's look again at the other part of the market. So you have RSP making a new high, you have Dow Jones making a new high, you have small caps doing really well off the right side, not yet a new high, but very constructive with a shakeout. Then if you have tech joining the party and kind of catching up, that could be a very nice trade. And like I said, we have been in this choppy market since October. So if we resume to the upside, then the bigger the base, higher in space. And this is true. When you come out of large period of chop, people shorted a lot in the last few weeks. A lot of cash has been raised. So that's usually where the bigger trends and moves starts. So that's why I'm always open-minded, always optimistic. I'm always go for it when I have my signal, because the signal that you will ignore because, oh, there's too much chop in the last few months. Oh, I did this and that, and that time that you will start to ignore your signals is probably the time where the market will work and that you will be missed out of that move. All right. And you need to be in that move. Remember last April, nobody was trusting that rally until at the end where they all chased it. But the big money was to be made in the first 2 to 3 weeks. That's where we had like 4, 5, 6% portfolio up days, and then that momentum faded along the way. But if you don't catch those early momentum, that truly killed performance of the trend of the market cycle. So that's why I always keep an open mind, probabilistic mind, and each signal is to be executed. Yeah, this is a long chop. In 2023, there was this kind of action, but outside of mega caps. So if you look at QQQ, SPY, these were looking very good back then in 2023 after the low of the bear market was made. But I didn't trade those mega caps, so I was kind of in that same chop period when basically the mega caps were lifting the market back then. So that was a period that come into mind. And you will have a ton, guys. If you draw on 10, 15%, that's nothing. Accept your drawdown. Know that when the market really kicks off, that will be so easy to make all that money back. You just have to be patient. At some point when you approach that double-digit drawdown, you take it slow. You protect your ass overnight like I did yesterday, and you just remain optimistic, because the time that you will drop the towel and say, oh, this market is not good, I will stop trading for a few months, then that's probably when the market will start this trend. And yeah, you will always have period like that. This is the market. The market is not easy. The market is not 2020. The market is not April of last year. Yes, you have period like that, 1, 2, 3 period per year, but usually in between, that's pretty choppy and basing or pullback. Chop is the worst, because, at least for me, because I want to engage on those signals, because I want to put myself in the position of that new market cycle. But that's the worst, because you still have them. The best is when you start trending below structure. And that's why I struggle, because price was just flipping around structure and giving me signal over signal over signal. But yeah, overall, we're not in a bad spot. It's not like we gave back like 20% of our portfolio in a big drawdown. All right, this is still very, very manageable. Tu peux-tu aller voir si c'est pour nous, là, l'auto en avant? Ben, tu peux-tu y aller, s'il te plaît? One sec, guys. Tu peux-tu y aller? Prends ton téléphone. Là. Ben là... Alright. Et je viens de te le dire. Je t'ai dit, oublie pas ton sel. Sorry, guys. Yeah, so any questions? Je sais pas. Parce que je pourrais pas sortir, il stationne en avant. Oui, je vais avoir besoin de sortir tantôt. A-Lab. What's up with A-Lab? Yeah, no interest. Straight gap down into structure. I don't buy those big gap down. That's a choppy blacklisted name anyway. When it looks good, A-Lab will kill you. That's for sure. All right, guys. So if there's no other question, would you wait for SNDK to base or would you engage? Oh yeah, good question. Well, now it's gapping up 5%, but yeah, I think it needs time. So if I would have still be in my runner, well, then that's another question. But to engage here, no. So this is nice flags, right? So you have a nice flag on SNDK, WDC, STX. I would have liked some kind of oops reversal inside the 21 DMA structure, but maybe we will not get that. And if not, if it just gaps up and go, then so be it. I will be out, and that's good for me. Probably that micron would be the best actionable setup for me on the daily reversal, but it's gapping above that. So yeah. So maybe on some weakness today if we retest that reversal pivot, but otherwise, yeah, not chasing that and not chasing the gap up on SNDK as well. Where do you see pre-market price change percent? So you have that pre-market line here, and you now have the extended hours up here just below the biggest, bigger quote up here, top right. This is a new one. Yeah, nice structure and sell, but yeah, not sure I want to play play those, to be honest. That's kind of a crowded trade, to be honest. Not sure I want to participate in that. All right, guys. Okay, last one. That's a request for TLAB. Would it be possible to add a call on current price versus yesterday's high? Yeah, I saw that. I need to answer your feature request. Yeah, I will note that, and when we are in this kind of stuff, we will add and bundle that. But yeah, that's a good idea. We have that in the screener, right? We already have that filter, but essentially what you want to see is in the watch list. So it's noted, and I will answer you in the feature request of the TLAB Discord. RH. All right, last one. After that, we'll close the session. Retail. Yeah, that could be a nice 21-day mini structure reclaim. That's a solid lagger though. Yeah, not sure I would touch that. But if you zoom in enough, there's this micro setup. But yeah, I wouldn't ignore that lagging of the last few months and years. What's my thought on PL? Living below a declining 21-day mini structure, nothing to do. That's not the kind of chart that I want to engage. I want to see that reclaim first, and if there's nice consolidation, then it's actionable. If not, waiting for the back test. All right, guys. So we'll end the session here. So I wish everyone a very good day. Be careful chasing that gap up right into a declining 21-day mini structure. Be careful if you want to test that potential anticipation signal. Then wait for some weakness. At least go for not big gaps up, and just be careful managing your risk and your new exposure risk. All right. So have a good one, everyone. Cheers. Bye-bye.